Hey there traders, this is Steve Miley, the market chartist for FX Explained, and our regular weekly macro watch roundup in here for the week commencing 26th of October 2020. Surging COVID-19 cases plus no US relief package equals stocks vulnerable. So let's first take a look at the macroeconomic and geopolitical developments that happened here over the past week. Well, COVID-19 cases are surging not only in Europe and the UK, but now also starting to uptick in the US, also seeing further hospitalisations and in some places getting to kind of critical levels in Europe and in the US. On top of that, governments are taking now even stricter global lockdown measures, particularly in Europe and the UK, and growingly in patches in the US. Diminishing chances of a US economic relief package before the Tuesday-November US election, as the two sides seem to be playing a game, not really looking for a compromise and trying to just get to the US election. We had the final televised debate in here for the presidential election between Biden and Trump. Biden still has a strong lead in the polls. And in the UK and Europe, we've seen the talks restart less than a week after they were called off by the UK. So how has that impacted onto global financial markets overall for the week ending the 23rd of October 2020? Well, the European equity markets are seeing more vulnerability in here. Here we're looking at the German DAX shifting to more bearish, going down to the low that we saw in September, looking very vulnerable in here to a deeper correction with those surging COVID-19 cases and concerns around lockdown measures throughout Europe, plus that US relief package not coming through. And the US not quite as vulnerable. We have set back from the October highs, a slight rebound at the end of last week, really a bit of a non-week. We saw a sell-off on Monday last week. US equity averages just about holding in, but still very vulnerable to further corrective downside. On the FX space now, we're getting real mixed messages. So we've seen a sell-off in dollar yen. That's yen strength. Now, yen strength usually comes with a risk-off theme. So we've certainly seen that from dollar yen. But if we look at the Australian dollar, we actually had a rebound for the latter part of last week. For much of last week, we pushed higher, had a decent rebound, but still caught within kind of a range environment, but reluctant to signal a more negative theme, which really needs to break below 70.00 here on Aussie. So the commodity currencies, which usually are very reactive to risk on, risk off, kind of showing us a slight, if anything, risk on theme over the past week, where dollar yen was showing us more and the yen was showing us more of a risk off theme, echoing what we were seeing on the stock indices. Turning to the reserve currencies, they've also been positive. So we've seen the euro pushing higher in here, a strong recovery from the euro over the past week, further damaging that whole head and shoulders topping pattern that developed August through September, and that is pointing the euro still higher, strong euro recovery. Again, that's not really what we would see in a risk-off theme, the euro pushing higher. And similarly in here, that euro pushing higher has then led to a lot of dollar weakness in the dollar index. Remember, the dollar index between 50 and 60% in here of the dollar index made up of the euro and euro factors other European currencies in here. So the euro strength in here really pushing the US dollar index down and reflecting a weaker dollar. And the pound in here has been very erratic in here throughout October, but a strong punch higher in the middle of last week, despite the setback we saw Thursday, Friday. That punch higher as the EU-UK trade talks resumed, leaving an underlying positive theme for the pound. So the euro and the pound, and to some extent the risk currency is more positive, pointing to more of a risk-on theme in here, but then the yen in here strengthening, pointing to a risk-off theme, reflecting what we're seeing in the stock indices. And then let's take a look at the commodity space. Copper pushed to a new multi-week, multi-month high in here this week. It did set back from that Thursday, Friday, but that copper advance again reflecting risk on, where if we take a look at the oil market dipping lower for the second half of last week, more negative consolidation theme, a cautious tone looking slightly negative, slightly risk off in here for oil. And if we look at gold in here, very, very indecisive. But again, a slight negative tone that we've seen in here for gold, if anything, over the past week. So let's turn our attention to the week ahead, the week commencing the 26th of October 2020. Well, just to point out, European and UK daylight saving time has ended over this past weekend, but the US do not see the clock shift backwards until the 1st of November. So we have a smaller gap in here at the moment between the European and the US time zones in here. So please be aware of that when you're looking at the data releases in the coming week. COVID-19 hospitalisations and cases plus new lockdown measures going to be in focus this week. We're going to have to monitor those. And on the central bank side, we have the Bank of Canada on Wednesday and the Bank of Japan in play on Thursday with their interest rate decisions, their statements and their press conferences. Taking a look at the earnings season, it's going to be a really busy week. Earnings could be super important this week. We have Microsoft, Pfizer, Merck and Boeing all in the first part of the week, but critically coming up on Thursday, we have Apple, Google, Facebook and Amazon all reporting. And then the week ends with a turn towards the oil markets in here with ExxonMobil and Chevron. So looking at the macroeconomic data, not so important this week. German IFO, US durable goods Monday, Tuesday, Australian CPI and that Bank of Canada press conference from its interest rate decision on Wednesday. We had the BOJ, Bank of Japan interest rate decision coming up on Thursday with then some important US data, GDP, personal consumption and expenditure, PCE and the jobless claims data alongside German CPI coming through on Thursday, and then we get that German GDP and retail sales number to end off the week alongside EU GDP and CPI and further US personal consumption and expenditure data. That big day of earnings though, remember on Thursday, that we're going to be watching out for. I'm going to wish you all a great trading week. Please stay safe out there and I'll be back with you with another Macro Watch very soon. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.